Good morning, everyone. This is Brittany Button, long-term care insurance specialist for Art Jetter and Company. Thank you so much for taking time out of your day to join us for this presentation from Nationwide. We have Alyssa De La Cruz presenting today on various tools and resources Nationwide has to help you have more productive long-term care planning conversations. Now, if you look at your sidebar, we do have some documents available for you to download, so please take a moment to do that. We will be addressing questions at the end of the presentation, so make sure to add those questions either into the chat or the question box. I'm monitoring both. But Alyssa, let's go ahead and let's get started.
Absolutely. Thank you so much for having me today and having Nationwide. We may also have on the line Charlene Werther. She is also part of your Nationwide team. And with Long-Term Care Awareness Month, we're really excited to share some tools that Nationwide has. I know maybe you've seen this before, or maybe it's new to you, but I always like to let you know what we have available that is absolutely free for you to use and really help you grow your book of business when it comes to long-term care, especially with the end of the year. This is probably the best time for individuals to start having that conversation around long-term care, or it may naturally come up because we're right around this holiday season and everybody is meeting with family. They're starting to have those conversations, maybe see, hey, is mom and dad needing extra help, whatever it may be. So it may naturally start to bring these conversations up a little more often. So I want to give you some of the tools that we utilize and why we believe in these tools. So we do have a tool called our healthcare cost assessment, and that's really for anybody that's just trying to get started and understand what that cost might look like for your clients. And I know that's probably the number one challenge we hear. Most people that are working with long-term care, it may me see it every once in a while. Hopefully it's something that you can incorporate and it be part of your business on a regular basis. But if it isn't, you want to have those tools and feel comfortable when you're bringing up that conversation. And I know that's the biggest concern I get is, well, what should I be showing them? How much is too much? How little is too little? And this is the exact tool that we want you to be able to utilize so that you can find that and actually have documentation for your client. They didn't pull this number out of thin air. You have fact-driven data that is tailored to them and unique to them and why you decided on that number. Now, on top of that, I always like to also point out that just because it says a certain number does not mean that's the number you need to plan with. It just gives you an idea. I think there's a lot of ways you can look at it. It could be sometimes individuals may really underestimate what the cost of long-term care is and says, you know what, I can just so self-insure for this. And maybe you can, but maybe you can't. And sometimes seeing that reality of what that number is saying, hey, I need to do something to buy myself time and may not be able to cover everything. But if I can offset maybe a year or two, couple years, maybe that will be enough before I have to dive into other assets if that's the case. So what I'm going to show you, we have some, you're going to see that there are handouts on your GoToWebinar section of the screen that you can download, and I'm sure we can be able to send that to you afterwards as well. But this is what it's going to dive into in this presentation, is exactly what you're seeing there. So how do I create a plan is usually that big question. Where do I start? So what you're going to do is Nationwide can offer you a couple ways, and I'm going to show you, this is a little bit of the longer version of it, but it is a more tailored one, and I think it is a nice one to even do on yourself so that you have that experience, what Nationwide can offer to you and your clients. So you would fill out a fact finder. It's a quick one-sheeter, and this is what would be created for you. And this can relatively be pretty quickly. I say we do it within a few business days. So I wouldn't say, hey, give it to us today, expect it tomorrow. It is very much possible that could be the case, but give yourself some time. If you have that meeting next week, you would send it in this week just to make sure you had enough time to get that report, but also be able to talk to our Retirement Institute that can really look at this assessment for you and answer any questions that you may have. So this is what that assessment would look like, and I'm going to show you that fact finder in a moment. It's going to basically illustrate everything that you filled out in that fact finder and put it in there and give your clients and yourself additional information, like, because it does also include Medicare costs. So it's going to cover anything in retirement that falls within healthcare, whether that's long-term care or also Medicare and premiums of that stuff that you may be paying during retirement. So it'll define those things, but also give you what you answered on there, so you can always cross-reference that as well to make sure, hey, that does make sense. I did choose Ohio as where my clients live, that kind of thing. And that's coordinating with what those costs would be. So you'll see here, it's going to show you, we're going to ask you some pretty basic questions, and you can do up to 2 people. So it could be a couple. So you could do husband and wife in this case, when they may retire. And that helps us with certain premiums on the Medicare side of it, life expectancy based on the questions that they may answer. And things of that nature. So this isn't stuff we keep for underwriting or anything like that. It's just to kind of gauge where we feel there may be some issues and what could lead to going on long-term care sooner. So you could see that Linda in this case has a lot of no's here. She has no issues. So she's likely going to have a good long life expectancy. Her husband's still relatively healthy, but does have diabetes. So that may impact his life expectancies as well. So that's what we're coordinating in here to kind of give you an idea, because not everyone may start care at the exact same time, which means the cost of long-term care will look different. So this is what that report would actually dive down into, and this is where I say it's really tailored and unique to your client. It's a great piece to give to them to take home, but also put in their file that you've had this discussion. And then let's screen in here and really look at what it can do there. So what it's going to give you, it's going to show you Jim here. So you may have noticed on that previous screen, it said, hey, Jim is going to maybe have a life expectancy of age 80. So with that being said, it's going to say something to the regards of, okay, if his life expectancy is about age 80, if he were to need long-term care, we think it might be about 3 years. It's going to be around age 77 in year 2036. In Ohio, these are his home health care costs today, and his what those costs will be also in the future as well, when he may go on claim. So, and it will project an inflation, and you can kind of guess if you think that's low, high. Some people may say, hey, I don't think that's high enough. You can also anticipate for that as well, but it's a good starting point. So I could see today's cost for home health care is maybe $2,200 a month, $27,000 in a year. We're assuming a 2% inflation in this in Ohio, and it does change per state. Some states have a little bit higher than others. And then by the time he may go on claim, it may be up to $3,100. So it gives me a good ballpark number to start with, gives you assisted living and also nursing home care, because your care could be a combination of all of these things. Now, how you may decide to illustrate this may also look a little bit differently. So these are the numbers I like to work with when I'm planning. If you are like, hey, I really just don't know where to start, this is where I may play with that number. If I know maybe the budget might be a little bit more constrained, I may say, hey, let's just look at what home health care costs might be, and let's plan a number around that. So we may say, let's do 3 years, 4 years, maybe 6 years of home health care costs, and we'll multiply that to get a projection of what we're trying to look for as a total benefit pool. So if they're doing, let's just round that up to about 40,000, and maybe I'm going to do 6 years of coverage, he's going to probably need about $240,000 of home health care benefit pool by the time he's age 77. That's the number I'm working with. That's the number I'm trying to achieve to plan for this. So you can see where you can really combine that. Another one I might do is, hey, I'm going to do 2 years of home health care, 2 years of 2 years of assisted living, and maybe 2 years of nursing home care. So you can really beef up that policy. Obviously, nursing home care is going to cost more, so it's maybe nice to throw in that number so that you have a good solid pool, and that may cover a range of kind of care that they may be receiving. But this is how I use those numbers to plan for long-term care, or when I'm showing a client to say, this is what I did with that report. Does it mean it has to be this number, or if you don't do this, you're not protected? Absolutely not. It's just something to get you started with, so that you're not picking a random number out of thin air. You have data that you've said, this is why I'm running this specific illustration. But what it also does is also reflect the differences sometimes between couples, because I do see that sometimes is, hey, maybe I'm just gonna do them, they're both gonna have the same benefit, but they may both have different needs. In this case, Linda may have a higher life expectancy, so what she may need may be greater than her husband. So in this case, it's saying, you're in really good health right now at 60, Linda. You may not need long-term care till you're around age 87. So that inflated cost is going to look different than your husband, Jim. We were looking at close to home health care being about $38,000 a year. by the time you need care, you're looking closer to that 46, 47,000 range, maybe closer to 50, depending on how we look at that. So I'm going to plan a little bit differently. So that may be that we may put more premium in her policy, maybe a different inflation option on her policy, so that we can make sure we're getting close to what she may need. But it is a nice way to kind of determine that and see that on paper of what that cost is. Obviously, today's cost is going to look the same. It's just going to be the future projection because she may need care 10 years after her husband. So this is where that report comes in really nicely. I'm not going to show the Medicare part of it, but it is an option that you do have. It will show you what Part B costs are, all of those things, out-of-pocket costs, co-pays, all of those things. So that's also another layer to this report that is fantastic if you're looking to really help them see that whole scope of what healthcare costs in retirement might be. So I've seen people pair, hey, we're going to plan for long-term care, and maybe we're going to do something like an annuity or a life insurance policy that we're overfunding so that we can take income in retirement for. So there's a lot of ways you can use this report to plan for cost in retirement around healthcare. So it's a great report for that as well. It'll give you nice graphs as well to kind of show you where those costs will look like and how they're inflating. And this is that healthcare cost assessment. So it's a quick one-pager. So I'll zoom in because obviously I'm sure you can't see it there, but this is the information we're looking for. So you could choose to do the Medicare cost only if you're like, hey, I'm just interested in that, or I just want the long-term care cost, or you could do both. You would fill out your information, you would put our Jetter's information so that they could get that as well. And this is just so we can contact you and go over that report, send it to you, but it gives you that option that, hey, we understand you may not know what you're looking at and may need a little bit of a deep dive. We'll call you and walk through that entire report, make you feel comfortable so that you can have that conversation. And then if you're like, hey, I want to be able to pair this with the solution, that's when you come to our Jetter, or you can talk to us at Nationwide, and we're happy to start running illustrations for you to pair what you're seeing here and say, hey, let's run an illustration to pair nicely with this healthcare cost assessment and meet your clients where they are. It's just a starting factor. It does not mean it, again, has to cover every cost that you're seeing there. It's just a nice way to say, hey, I'm not pulling numbers out of thin air. There is a significant cost for healthcare in retirement, and this is why we're having that conversation and planning for it today. Where I mentioned you could do up to 2 individuals. So you can do the original client or their spouse or partner. It's going to ask you where they're looking, maybe when they're looking to retire. That age is just important for the Medicare costs. But the retirement location is also important for the long-term care costs. So if they live in Ohio, but maybe they're going to retire in Washington, obviously we want to know that because those healthcare costs are going to look very different and significantly higher. So we need to plan a little bit differently, especially if they're like, hey, I'm going to move closer to my grandchildren during retirement. So we want to plan accordingly for that as well. These are those assessment questions that help us determine life expectancy. Again, it's not going to be something that's 100%, but it gives us a good idea if we have somebody that has, hey, high blood pressure, high cholesterol, type 2 diabetes, maybe has been diagnosed with cancer. These are all things that may say, hey, you may need long-term care sooner than your spouse that has none of these conditions. Or if you're a tobacco user, all of those things. So these are the questions. We don't store this data. It's just purely to calculate that life expectancy so we can determine what that number is going to look like if they were to need a long-term care event based on that life expectancy. It's going to ask you for annual income in retirement. This is going to be for more of that Medicare part of it to help determine what premiums that individual may be paying. So that's what that's being utilized for. It will ask you what kind of Medicare coverage, if you are deciding that you would like that part of that report as well. Do you want them to include Part A, B, and D, supplemental, whichever you're looking for? Maybe it's all 3, so they can do that as well. If that's not what you're looking for in that report, you don't have to include it. And then it will ask you, once you've completed this, go ahead and fax it in or email it in. And then if you have questions, there's a number that's provided as well. Again, this is a pretty quick turnaround. I usually see it a couple within a couple business days, maybe 2, 3 days at most. I would say 4, but just give them time so that they can run that for you so that you can have a conversation. That's the only, if I had to say there was a downside to this report, is that it's not a quick turnaround, but it is very much very tailored. It's free for you to utilize. And I would say if you want to use it on yourself just to test it out, we do it all the time. We advocate for our advisors to do it on themselves just so they can see what that experience is for themselves, to know what that call is, because it's nice to be able to reference those numbers and reference them to yourself and have someone have that conversation and say, hey, this is what you're looking at for long-term care costs and all those things. And they usually send this report when they send it out to you. They'll copy your wholesalers as well, just so they can follow up with you and see if there's a solution that they can help build around what that report has on there as well. So I'm going to exit out of this and show you another tool that you have available to you. And let me bring that over. So another tool that you do have available as well, so really close, so let me back that up a little bit here. So this is your flyer. I'm gonna get a little close, so if you do wanna bring out your phone and get that app, you could do that as well. So this is, I would say, the quicker version of that report that's just long-term care focused. It's using the same data, it's just not gonna be as personalized. So I'll blow this up a little too far. So if you want to take out your camera and scan that code, but it's also on the handouts section of the webinar. What this does is you just download the app. It's on your phone. You do have to type in an access code at least once. So it's going to be the NWLTC, but once you've done that, you're fine. But it is something nice to have on your phone. So if you're having that conversation today and you don't want to really wait for that tailored report, this is a great way to pull up on your phone. It creates a nice PDF that will give your clients that same information of what those costs will be. It's just gonna, now you're gonna have to determine maybe what date in the future you're looking to look at. So in case of like Linda, where we were saying age 87, we'd have to go and really look at that graph and say, hey, we're gonna look at whatever year, I think it was 2046 or whatever it may be. That's where I'd have to tailor that graph to know that. So let me show you how this would actually play out for you. And here we go. So this is where it's going to take you. You also can do this online as well. So that flyer will show you the website, but this is essentially what the application is going to look like as well. So I could sit here and say, hey, I live in Texas, so I'm going to pick Texas and say, maybe I want to come, you can compare up to 2 states. So I live in Texas, maybe I will consider retiring also in New Mexico. It will tell me the state averages. Obviously, you can see there is a difference there. And then I can really click on here and dive deep into it and say, okay, I currently live in the Dallas-Fort Worth area. Maybe if I were to go to New Mexico, I'm going to look at Las Cruces and see what that cost is. You can tailor the home. So it's going to tell you informal care, home care. It will start off at a low number of how many hours per week. So you could obviously scale that higher. So maybe 7 hours is not a lot, or 24 hours. So maybe I'm going to say, hey, I need, it's getting stuck there. Maybe I'm going to need 40 hours of care. So that number is going to change there for me. So I'm showing today's cost right now, and I'm going to say, hey, informal care. So remember, Nationwide covers informal care. So that's care from loved ones, friends, family, nobody that's necessarily like a licensed caregiver, if you will. So sometimes that cost can be a little bit lower to some degree, just kind of depending, but it will show you that's what the cost is going to be annually for informal care, home care, assisted living, and nursing home care today. Obviously, I don't need long-term care right now. Hopefully I won't, but maybe I'm going to need it in 30 years. So I can scale this all the way back in 30 years and say, okay, well, what maybe will I be planning for in the future? And say, okay, well, now that nursing home care is 204,000, maybe that's the number I'm using to compare there. And you do have the option to compare multiple years as well. So there's just a lot of range. So where I mentioned where Linda in that case gave us a specific age range when she may need long-term care, this you're going to have to kind of tailor it, and it's only going to give you a 30-year span in this case, but still a fantastic way for you to look at this. But you take it a little bit further and say, okay, maybe I've got these numbers. I'm going to just do the 30 years. I can generate a report. I'm going to type in my name, my firm, my email address, and my phone number, and I'm able to create a nice PDF that I can send to the client. If you're doing this on the application, you can text it. It will generate a PDF for you, and it's going to say the same information for this individual. So I'm just going to type this in and so we can see ABC 1, 2, 3 nationwide. And I could certainly put this a lot nicer, but we're just going to generate it a little quicker just so you can see it. So create a nice PDF. It's going to give you that same information you just saw on that screen for your client. And then it's going to give you a couple of terms and definitions for that client. So if they're like, what the heck is informal care? Or what does that mean? We have it there for you. What's home care mean? What does assisted living mean? What does nursing home care mean? So it's a nice quick snapshot. Again, not personalized as a healthcare cost assessment, but a great tool to have in your back pocket for that quick meeting that you just had and this conversation came up. You have a tool, you have actual numbers and data that you can provide to that client, or data that you could use to run an illustration for yourself. So that's already there for you. And if you wanted to take it a step further, you do have the ability to do a quick quote. This will just take you to another portion of our website that will give you the option. It's not going to be as tailored as an illustration that you would get from our JET or ourselves. It's just going to give you a nice quick example of what that might be. So we were looking at Texas. It's going to give you a couple of different options here to tell you, hey, what's going on with Nationwide? We're in for, we have cash indemnity, no use it or lose it, how it works. I could put a female, male. I'm married, I'm a non-tobacco user. Oops, didn't click an age. So maybe I'm gonna put 36. I want some inflation. It's not going to give you, again, all the options since we have a 3% simple and a 5% compound, but it's just going to give you some basic stuff. Maybe I'm going to do a one-time pay or pay to 100. We have more options than that, but again, it just gives you a nice quick example for yourself. Maybe I'm going to put in a $80,000 premium, and it'll run a nice quick quote for you so that you can have that. So you see, it gives you a nice example. So this is all things you can do without having to pull out your computer, that you're able to do right there in front of that client and not stop that conversation. It's tools that you're able to continue to, hey, I got the number that I'm working with. Now I'm going to run a quick quote. We can certainly tailor it in future conversation, but it's at least giving us something to start with without having to do anything but a couple of finger taps here and there. So it'll give you what day one benefits are, what it is at age 80 for that $80,000 that this 36-year-old's putting in there, give you a quick synopsis of, hey, your death benefit's $124,000 if you don't utilize it. You have that 1.4 million at age 80, which is probably, I'm not looking for long-term care day one at 36. I might be looking at it at age 80 in that case, but it's a nice quick quote that you're able to utilize on here. Now, what I did want to show you is also, how do we take this a step further? Maybe you want something more tailored, and what could our Jetter and Nationwide help you with once you get maybe a more personalized report or you're working off of this report? So let me throw this back up here. So this is that report that I just showed you in that slide for Jim and Linda. I'm just going to scroll down a little bit here just so we can get to those numbers and projections. Actually, this number is a little bit higher than it was. Let me see if I use the slide. That's okay, we'll use this number. So this is a little bit more updated for today versus the slides, but if you do remember from the slide, it said, hey, projected cost at for Jim was about $38,000 and she was about $46,000. That's the numbers I roughly utilized there. So when I did that, I was able to run a quote, and this is something that I would normally do in here for this case for this client, and how I would utilize that is I did it a couple of different ways. So I'm going to look at Linda in this case. So what I did was 2 years of home health care, 2 years of assisted living, and 2 years of nursing home care, just to kind of give her a range of, let's cover a little bit of every cost in every scenario. And this is where I'm starting with. And if that's like, hey, that's too much, then we just scale it back and say, okay, maybe we just do 6 years of home health care because that was our lowest number. And it gives us something to work with and be able to show that client that's what I used here. So for her, in her case, all those numbers from the report gave me about $740,000 is what we were looking to make sure she had by the time she was age 87, which was when it was projecting she may need long-term care. So in this case, I just threw some numbers in there to get there. So for her, it was about $110,000 of premium that she was going to need to put in there in a single pay. I did a 5% compound so we could get there as quick as possible. So let me zoom in a little bit here. If you see here at age 87, I'm able to hit that number. That $740,698 is what I was looking at. I'm over that number at age 87, so I can feel comfortable. I use that report to say this is why I'm looking to get to that number at this given point. Does it mean you're going to need that much? Will you maybe need more? It's hard to say exactly, but this is where you're using that planning to say, hey, this is where I feel comfortable, and hopefully this will cover all the needs that you have. Or maybe if that's, hey, we really can't do 110,000, we can scale it back and say, hey, let's do that 46,000 times 6, and let's get to that number if that's the case. And I did the same thing for Jim. Now Jim, remember, was 10 years earlier in this case. So I did 100,000. I knew he wasn't going to need as much, but I'm looking at age 77 is when he may be going on claim. And those numbers was about 543,000 is what he might be looking for if he did 2 years of home health care, 2 years of assisted, and 2 years of nursing home care. So at age 77, that's the number I'm looking at is 543. We're able to achieve that there. Here in this example, he's at 566. So this is how I use that report to say, this is how I'm planning for that. Now, if that was the case to say, hey, that isn't something we can do, but maybe we could do that 38,000 home health care, maybe that's where his budget might be, then maybe I'm planning for a benefit of 228,000 and I can really scale that back and say, okay, let me look at maybe our product minimum and see where we can get there for him. Monthly benefit. So this is the bare minimum of the product to get it to the lowest point, and I might still be able to achieve that for him and well surpass that actually. So let me even bring down the inflation so I can bring down the cost some more. So maybe they're saying, hey, he really just wants to stay at home. He's not going to want to go into any kind of care in that case. So let's just use the home care number, which was about $38,000. So that's about 228,000, give or take. So in this case, I'm doing the product minimum, still giving him some inflation. I'm doing the 3% compound. I'm able to get him 320,000, so more than the 228 that I was running, and brought that premium down to 63,000. So there's a lot of ways you can play with this. It's just having maybe some numbers to work with and meeting the clients where they are. Maybe this individual's going to need assisted living. Maybe they're going to need nursing home care. There's still a buffer there for them to have that extra benefit, but this is how we use those reports to help plan for that number, so you're not picking something out of thin air if you're not comfortable with doing that. Sometimes I have individuals that absolutely just say, hey, I need a $5,000 benefit throughout the whole time, and that's what we're looking for. That's okay, that you can work with that. But if you're saying, hey, I want to maybe do something a little bit more tailored, these are fantastic tools that we utilize to help build off of that report to say, hey, this is why I'm running this number, because I know this is what the cost might be in your area by the time you may need long-term care, and we're tying it together and they have actual numbers and data that you're able to provide for them. So with that being said, I know that was quick, but we want to give you a lot of information to know how these tools work. I want to open it up to the group and see what questions you have for us. And if there's something that I didn't go into detail enough that you would like to see, I'm happy to walk through that as well, but we wanted to make sure we were respectful of your time and gave you something that was sweet and quick, but something that you could utilize this month for Long-Term Care Awareness Month.
All right. Well, thank you, Alyssa. We did have a few questions come in. First one I'm going to direct your way. On the cost of care software calculator you showed, it seemed to show the cost of services at an annual level. We have folks curious if you can show that on a monthly or daily amount instead of the annual cost of, say, a nursing home.
Yeah, let me see if it may not do it on that one. Let me see. It looks like they're going to annualize. Oh, I apologize. Yep, you can. So you can, on this one, change it to monthly. You can change it to daily.
Perfect. Yeah. And so for some of you folks on the call, a lot of our policies are monthly benefits. So that might just be a little bit easier to show your clients, showing monthly expenses and expectations. And again, of course, these are averages that you'd be showing. Now, Alyssa, the rest of the questions coming in focused on products. So we'll talk a little bit on products. We didn't want to have a heavy focus on it today, as we wanted to show you tools at your fingertips. But regarding Nationwide, we're finding them to be very competitive in the industry right now, especially since they're kind enough to lower their new business prices here just a few weeks back. So with Nationwide, you are looking at a cash indemnity policy. You go on claim, Nationwide's just going to ask where you want that check sent to, whether that's to yourself as a policyholder or assign those benefits to a service provider. Also, their strength here is within their residual death benefit. I like to think of this as a built-in final expense policy. If the policyholder uses their entire benefits for long-term care insurance needs, you will see a residual death benefit illustrated, and that's just going to be a value still passed down to that beneficiary. I know there's a lot more we could talk about on the product. Alyssa, I don't know if you want to chime in with just a few snippets of information, but definitely our team's ready to have a one-on-one conversation for those that want to go more in depth on the product.
Absolutely. So yes, Nationwide only offers cash indemnity, whether that's on our life and LTC rider or Care Matters. The product I was using for today's presentation was Care Matters. It's going to be your hybrid asset-based link product, somebody that's looking for more long-term care than death benefit. The death benefit's really just there to preserve your initial investment, taking it a step up from maybe what traditional isn't able to offer your clients, where you have those guarantees and have something that still comes back to you if you never utilize it. Now, if your clients still have a need for life insurance, then the life with the LTC rider is still a great option. And I'm always going to say, if you still need life insurance, then yes, that's still the route to go and kind of cover both of those options for yourself. And then if down the road you need more long-term care, you can supplement it by adding one of these asset-based products. But we can always help you determine that as well. And sometimes that shifts. We're not here. The nice thing at Nationwide, we don't compete against each other on different options. We are truly looking for what is best for your client. And if there's still a need for one way or the other, we're going to say, hey, I think this is really going to go a little bit better on the Life with LTC rider. We did recently just reprice as of the 7th, so we should be number one in a lot of these cells under age 65 for your clients. So it has become even more affordable today. This is our second decrease of the year, and that's just because we really want to stay number one for you and for your clients. It is a fantastic product. I really truly believe in cash indemnity because I think that makes that easier for you at the end of the day. So your clients aren't coming to you at claim and asking you, hey, how do I reimburse for this, or to knowing that they can use their benefits however they deem necessary. These products does have a residual death benefit. Brittany mentioned, it is the highest in the industry. We also have a retroactive elimination period, which not the other cash indemnity option out there does not have that option. So what that basically means is you still have to wait 90 calendar days once you go on claim to get your benefits started. However, we will retroactively pay that. And because it's cash indemnity, you don't have to show receipts for that. So if your benefit was $10,000 a month, day 91, we're paying you back for those 3 months, so $30,000 plus your fourth month. You don't have to take it. The question I always get is, do I have to take it? Absolutely not. But it is yours to utilize and take it out of the policy. And I would, so I could save it for maybe next month's more expensive, maybe 5 years down the road it's more expensive. I have a pool of money that I can access. And that is truly the power of cash indemnity, is really being able to get as much of your benefit out as possible every single month.
Perfect. Well, thank you, Alyssa, for presenting today. That really wraps up those questions we had there. But the team is standing by if you think of additional questions or would like an illustration or unable to download the handouts we are giving out during the session. Call our team. We'll be standing by. Number here is 800-228-0008, or shoot us an email at ltci@jetter.com. So appreciate everyone taking their time out of their day today. Again, thank you, Alyssa, and look forward to speaking with you all soon.
Thank you, everyone. Have a great holiday.